Okay, let's see. We have a couple of things. First of all, Janet Yellen yesterday came out and said we can't cut the IRS $80 million increase because, quote, it will hurt the IRS plans for improved service. Oh, they had some really great customer service things that they were going to do, so can't cut that. Also, there's a story out about how our U.S. debt, the interest payment alone, is now surging past $1 trillion a year. Carol Roth is in studio to talk to us about that. Hi, Carol.
Hi, Glenn. What a great achievement. Aren't you excited? We finally got that interest payment. Our credit card payment is $1 trillion a year on an annualized basis.
Yeah, but we can borrow at higher and higher interest rates.
Right.
So we can make it $2 trillion soon.
Right. This is fantastic math. It's the eighth wonder of the world, as Einstein said, is compound interest. Either you're making it, you're earning it, or you're paying it, and we are paying it.
Think of this. Do you remember that debt clock in New York City? And it was, I don't remember when they started it, like $5 trillion. And it would take forever to get to 6. Now, every year, just on interest, and we've just begun this journey, just on interest, $1 trillion.
Yeah, I think that people, don't realize this is the cost of financing things we've already bought. This doesn't get us anything new. It crowds out other spending. It crowds out, as we take debt, productive capital in the market that grows the economy. It's just the worst possible personal finance. If you're in your home and you overspend and you put everything on the credit card and now all of a sudden you're paying all of this money in interest, you would say to a family, that's ridiculous. You have to get your house in order.
And what that family says to you is, no, I'm going to get another credit card.
Right.
Okay. And I'm gonna pay that interest, and that interest, because I'm not really paying those things down. Yeah. That interest is going higher and higher because I'm becoming a greater and greater risk.
But you know what people do? If you have your own credit card, sometimes they'll go, oh, well, there's this great offer over here. There's a 0%, introductory rate, so I'll just transfer it over here. We don't have that luxury. The rate just continues to increase. I think it's doubled in the last 19 months in terms of the financing cost for the U.S. government. So we're having to pay higher and higher rates on all of our borrowing, including the interest, the financing cost of that borrowing.
So it was just a couple of months ago that I saw that it was $700 billion a year on interest. That was just a couple of months ago. Now it's over $1 trillion a year. And we've only refinanced about a third of it, right?
I mean, I don't even know if it's that much. I know that as of a few months ago, about a third was coming due over the next, 12 months. Yeah, but I don't think we've gotten that yet. In fact, they said that they're going to have to borrow, just, forget about the interest payment, but in terms of new money, Janet Yellen, Treasury said, over the next 6 months, almost $1.6 trillion.
It's incredible. So I had Brian Riedel on, I don't know, it was a couple of years ago now.
Yeah.
And we were talking about this problem. He was talking about how large it was going to get. And what he said at the time, and he said over and over again at the time, was, why don't we take these short-term loans that we've made in this very low interest rate environment and just lock them in long-term, right? Because we would avoid so much of this. And normally I come back to, well, the government doesn't care. They want to spend more money. But this is the reverse. They are going to now spend more money on stuff that they can't get. It's just they're just giving money to lenders instead of getting all their fancy new programs. It's actually even worse for people who want to spend. Why didn't they do this at the time?
This is the biggest debate. I don't know if you're familiar with Stan Druckenmiller. He is this iconic billionaire investor, incredibly smart and savvy. And he basically said, he put Yellen, right on the hot seat, said, this is the biggest mistake anybody has ever made, the fact that we had all of this debt and you didn't lock it in over the long term, which in theory I agree with, and is something I think you and I have even talked about. The issue that has sort of come out as a bunch of us have done the research is that the reason they didn't do that is that they couldn't. There was not enough demand at those, high end
because
of the
we
yield
had shot
curve.
ourselves in the foot so much.
Exactly. And that what would happen when there is no demand and you try to put more supply in, that the interest rates go up. And so basically what is believed in economic circles is that would have killed the economy and thrown the Treasury into a tizzy, the Treasury bond market into a tizzy. And so if you read, there's a new report, this Treasury Borrowing Advisory Committee just put out this report, and they said, we recommend right now that they issue at the shorter end of the yield curve, things like 2-year and 5-year and maybe 10-year above the normal recommended allocation. That sounds a lot like inflation, right? We'll let it run higher for a little bit of time. Eventually, we want to get back to there. But the reason is because there is no demand for locking up money with the U.S. government for 30 years, and the rate that you would have to pay would just absolutely undo everything. So this is a real concern, and it's one that doesn't go away. It's not like we're like, oh, well, we're in this tight period, but they're going to be cutting spending and we have all these great initiatives. There's absolutely no appetite to cut spending. We're obviously in a very tenuous geopolitical environment, which, Yellen's come out and said, oh, yeah, we've got, plenty of money to be able to help finance that, let alone that escalates. I mean, we are in a really perilous financial position, and the Treasury market and that information that's coming out there is really telling an important story. Of course, they make it very opaque, so the average person doesn't understand that. And the numbers have gotten so high, I don't think people can even process it.
So, I mean, I've been saying this forever, that we are going to pay a very high... Ronald Reagan said it. FDR said it. If you don't have your house in order, there comes a point where it just all comes crashing down. It doesn't seem to be crashing down. I mean, it's bad, but people still tell me we're not going to lose the reserve currency. We're going to be fine. The dollar is going to be fine. We're going to come out of this. They can't explain to me how, but they seem to be right. I mean, how long could this last?
I mean, that's the multi-trillion-dollar question, right? We don't know. I mean, we look at periods in history, we go back 50 years, and we look back historically, that's a tiny time period. But when we're living through it, that's a big chunk of our lifetimes. Yeah. So for us to say, oh, it's going to happen in a day, a week, or whatnot, we just know we're heading towards that precipice. What we've had going for us this whole time is that we have an incredibly productive population. We have a lot of ingenuity, and we are the cleanest. That. And yes, so we're on the wrong side, but it still exists.
Yes, it does.
And we are the cleanest shirt in the laundry because we are not the only central bank that has, committed these sins. And so there isn't sort of this obvious successor. But as we've talked about before, when you think about these changes in the financial world order, not every war brings about a new financial world order, but every new financial world order has been brought about by war. And to the extent, God forbid, things escalate in a crazy way, that becomes an opportunity to reset. What do the reserve currencies look like? What do the debt loads look like? They change around. They change the rules of the game. That becomes a reset button for them. And so I sincerely hope that this is not something that's being looked at as a potential positive or good outcome.
No. Who would look at something like that and say it would be an opportunity for a great reset? No, they're not looking at that at all.
No, right.
Carol Roth, I wish we had more time with you, Carol, but thanks for coming in. She is the author of the book, You Will Own Nothing. She is a former investment banker, and she gets your town, your job, your finances. Read the book, You Will Own Nothing, and figure out a way forward for your life. Carol Roth.